shit, I need a weight call. Oh, thank God, I'll start recording. I got one. Hey, it matches my shirt. All right, what's up, y'all? Hey, it's Saturday, 6/19. My cat's here. I'm here. Yeah, it's a Saturday, boys. Clause the law. Unless someone else sponsors me first. Then screw them. But for now, it's what I'm drinking. So, if you're new here, welcome new kids. How are you? If you're a veteran here, you're probably one of the 400 folks who watch my Saturday videos. I make these because I have an issue that I don't like that a lot of folks who do this really don't insist on you learning to do this by yourself. A lot of it is, hey, look at me, give you news, boop, 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 watch my whole video so you can know what to do. I'd rather you guys learn what to do without me, and then that way when you want to watch me, it's like you're reinforcing good behavior. Or more importantly, you're coming to me because you think I can offer you something equal or beyond what you can already do to make your life a little bit easier. I don't want you guys to be watching me because you can't do it yourself. So when it comes to a trading plan and being successful, one thing that I always emphasize are these few things. Firstly, I always emphasize risk management. Then we go to all three types of analysis. We have fundamental, as you know, technical, as you hopefully know, and then mental. You know, that whole entire edge we talk about on this channel. The class is coming in about a month and a half, 2 months, that'll be included. But just like, are you confident? Do you have a plan? Do you believe in yourself? Do you know it's a game of probabilities? You know, all these types of things you must get into. So it's those two things. We talk about writing a good trading plan. We talk about being consistent. We talk about great goal setting on this channel, but this one pertains mainly to macro moves, indexes, and sectors. It doesn't matter how good your TA is, or how good your fundamental analysis is, or how good you can write a trading plan. If the markets are taking a shit, you're taking a shit with them, boy. I mean, you can maybe scalp or day trade, but most of y'all are probably like, why was my week all red? Well, everyone's was, so feel better about it. So today what we're gonna cover are the macro indexes, the 4 that I watch, and then every sector and what I'm looking for. If you enjoy this kind of content, like, subscribe, hit the bell notification. Love to have you guys here long term. If not, it's fine, but again, I'll just cry myself to sleep. That's okay. But, you know, stick around. I have a Discord. It'll be in the description box down below. That's mainly watch list driven and Sunday through Thursday show driven. I'm not as intent on pushing it for these kinds of shows. This is, again, very educational, if anything. With that being said, ladies and gentlemen, let's get into it. So look at this nice website. All right, so this is stockcharts.com. Again, there's a chance that you must do the free trial to do this. I pay them. I believe in paying for services I enjoy. I mean, why not support this company? And they do good stuff here. So what we're looking at, I go to charts and tools. You've seen me use a few of these before. I actually have one saved, ready to go for seasonality and some other things. I've been using RRG graphs recently. It's what I enjoy the most. So with RRG graphs, we can go to the sectors. Let's do the year. That's fine to start off with. So we can see clearly now on a year chart. So again, this is every 10 weeks. Okay, so this is 10 weeks of length, right? And we can see all the different lines. XLU is utilities, XLE is energy. If you don't know these, Google them, all right, and go through them. Make sure you know these things. These are really important to know. XLB is basic materials. You know, XLK is tech. So this was in July of last year. This is August, October. This is January area, March, April, May, and now we're in June. So on the year chart, right? The last year, we've seen this. All right, we've seen a lot of stuff go from red, blue, green. Now we're all back into a nice mix of things. So if you're gonna go for long-term trading and holding, this is more relevant. If you're gonna do day trading, the next chart is more relevant. Keep that in mind. So we have these 3 are what I would focus right here for long-term holds: XLU, XLP, and XLV. Now again, you see how this is a week, these dots. You may be 2-3 months away from these being really the focus. But if you're going to load up for some midterm 1 to 2 month swings, check these out for sure. If you want more quick gratification, XLRE would make a lot of sense. Think about the market, right? Lumber is expensive as shit. Well, it's more expensive than gold, not shit, but it's really expensive. There is the Canadian-American border haltage. There's a lot of supply chain that's been disrupted. Housing, there's no supply, all demand. You know, you go to any housing Zillow website, there's nothing for sale. This also ties well to some discretionary and some hotel options. There's a lot of great XLRE. The issue is going to be this, and I can do this with you. We'll go to finviz.com, go to screener, go to all, and we'll go to sector real estate. Here's the issue. 275. Let's go by volume because that makes it a little bit easier. Because I'm not going to trade low volume stuff. I don't do it. Let's go to charts. Let's go to, yeah, this is all fine. Look at all these charts. Now, NLY looks really good. Okay. But as of now, and there's a huge sell-off, like this looks okay. But like CLNY, at the top of its resistance. This was last week, by the way. NRZ looks pretty good. MFA is okay. You know, these are all pretty good. So I was actually corrected, but like here, this one's way too high. That's way too high. There's a lot of these that are still pretty high up here. So finding technically sound deals will be pretty hard. Like SPG looks really good. ARR broke down. You don't want to buy that. You can look at maybe EQR looks okay. That's all right, right? But like MGP, you know, there's a lot of these plays that have either, like ABR is a great example of a good stock, right? ABR looks like it's right where you want it. Oh, look at that, I called it. But ABR is right where you want it. Look at that nice charting, right? Like ABR is right where you want it. But a lot of these plays are going to kind of look like core here, which again, I called core. But like COR now is up here. You're not going to buy core. So the issue with real estate at the moment is that a lot of these that have higher volume are going to be overbought or they're breaking something. So like I know I've played store before and called store, but STOR, right, is probably a bit high for where you want to buy it, right? Sure, you can say this is technically okay, right? But I mean, compared to buying it over here, I'm okay on it. So we'll see. A lot of real estate stocks are probably going to be overbought. Sure, since this week of a sell-off, probably not. They should be okay. Basic materials is slowing down. XLB, again, while I have you, I mean, if you enjoy this kind of stuff, you should be fine watching this. XLB, the same thing. A lot of these are breaking down. Cliff is great. X, I hope it comes back. But a lot of these, after this huge sell-off this week, I'll look at the daily charts next. A lot of these are breaking. Broken. So these things are all coming down hard. So again, even though they're in the green, doesn't mean you should be buying them, right? So a lot of these things are breaking down. So these are going from leading to our weakening. You see how quick this is coming down? Contrary to XLC's coming up, you know, industrials took a big hit. Tech and XLY are going slow here. Bless me. Thank you. So right now, it's also important to mention that these charts are based off of against the S&P. So it's against the S&P, the SPY. So, you know, if the S&P takes a fat shit, which it kind of is, like, you know, we can go to like 1 week. Maybe I'll change real quick. To 1 week, which we're about to look at. It's not doing too hot, right? So let's go ahead and look at the daily together. So you can go to daily here, select, we'll do 10 trading days. I always use 10, 8, 9, or 10. And we can see just in this graph here, technology did good. And that's what's really great about these charts, is that I even said for my Discord folks, and I said, XLK would be what I'm buying. It's the only one that's breaking into this. And of course, you would have hopefully been greenish this week. You can see XLB, FI, and P got wrecked. Again, you can attach that to the Fed speech and inflation rates. Fundamentally, I'm not the greatest or most interested in reading the news. I don't trust the news that often. And again, that's not a political thing from either side or anybody. I just don't think it's viable anymore. Every time we see a good earnings report, stocks crash. Every time there's bad earnings reports, they rise. It's a complete clusterfuck. I don't know. I don't trust it. But it was obvious that we see real estate's down a little bit. Energy, materials, finances, industrial, and staples are just taking massive hits. While you can see discretionary, which is shit people don't need. Real estate, healthcare did fine. Utilities got hit. That's a smaller sector. And tech did okay. So if I was you on a smaller range, I use this chart more than the yearly. XLY looks pretty good. And we can see XLY. Where is it? I'm done. Discretionary is doing okay, right? We have healthcare and utilities doing okay. XLC is okay. If I was buying anything this week, it'd probably be tech. If tech's going to keep doing well, That's fine. Tech, discretionary, healthcare, utilities, maybe some communications would be okay. But I mean, the S&P is all red. Most stuff's going to be red anyways. So that brings us to the topic of indexes. If everything's red, what do you buy? What's the game plan? So on and so forth. Let's check out these indexes together real quick. So let's go to dash ES. That's going to be, well, let's go to SPY within the lines item. So that's SPY. Clearly it's in a great uptrend. Again, technical analysis needs to be played here. You can see a very nice trend area, keyword area. I don't believe in lines. I like areas, like loading zones, price target zones, those kinds of things. We have a great line area. What I'm going to do is actually take our resistance lines here and make a line based on our resistances. That's probably equally good. Looks good. Duplicate, come down, and we can see probably something along these lines is what we're looking at for our upward channel. Now again, everything that I'm going to talk about with SPY and dash ES is be predicated on this price action holding. If this breaks down, everything I'm saying is basically worthless. We got to reset it. So again, keep that in mind. This looks pretty good though. We're coming into value. Dash ES is what I use usually. You're like, where are these lines? Well, the gold ones, as you know, are my upward channel. The orange ones are resistances. Whites are supports. This is a 5% pullback line. I want to watch that myself. So what we're looking at here is this. I think we're going more horizontal. I think we're going to have melt ups and then elevators down. I speak about this often. We have, look at all this action in this whole area where my cursor is. See how little the volume is? You have three big ones, elevator, elevator, elevator. Every time you have big volume candles on dash ES or a SPY, usually they're going to be red. So high volume days, I usually like to get out and secure my profits. Side note. But I think we're going to be going sideways here. All right, this is a good deal. Let's say this is a stock. Okay, if we had a whole nice stock like this and we're running up just like this, we're right where you want it to be. I mean, we have a support area in this area, maybe a little bit lower, or maybe around like 4120, or I guess 412 on SPY. But we're getting to where you'd consider a good deal. It could get lower, it could break down, who knows? But again, if you're going to be more bullish on the market, which I always am, we're getting into a good deal area. So again, do I rush in? No, I'm not going to rush in. But this is obvious that we have a great deal in the top 500 companies, and a lot of the smaller tickers follow these kinds of things. So I would assume with Elliott wave theory, even if you want to go with the 1, 2, 3 down, ABCDs, where you want to follow, there's a good chance we're getting towards the bottom of this pullback. The key word is this pullback. There could always be more. They could always break down farther. If inflation gets worse, if supply chains get worse, if folks become less confident in where we are, they can always get worse. I mean, Lynch said, what's the lowest a stock can get? 0, including this. So don't get overly scared. I would definitely get not overly bullish either. But if the overall market sentiment is going to be a lot of scared people, this is where I'm looking to buy. I'm not saying throw your money into it, but if I see a good stock that I like, and I actually just made a new watch list, if you want to look, I mean, I made this whole new one for my Discord this week. All these plays here are basically going to be at value, like a WH I was looking at, perfectly getting into value, VRA getting into value, VET coming into value, Taco coming into value. All these plays I watch are coming right into value, and so is the indexes. I would be remiss not to at least mention I would hopefully be buying a few, if not some of these plays I have. So overall, the S&P, we're headed down a little bit. Hopefully it's a temporary pullback, but if you're confident in the market, which I always am to some regard, this is a great place to be. Let's check the NASDAQ. What's interesting about the NASDAQ is it's different. It's not really having a horrible time at all, which again will interpret me to think about volume. If folks are, I mean, we're selling off here too, but like if folks are really selling off in the S&P, but the NASDAQ isn't as bad, let's check the Russell and the Dow 30. If the Russell's also not too bad, it shows that most likely money is going into smaller caps and into some growth stuff. That ties back to XLK, right? If technology is doing well, and so is discretionary and comm services, which are fairly tech-driven as well. If those are going to be doing well, and the volume is going into small caps, this is your time to load up on some growth stocks, possibly. So NASDAQ is also coming down hard, but we had a higher high literally a few days ago. With the NASDAQ, what I'm looking for, and this also goes with the S&P over here, is I want to see a higher low. All right, 13.8, 13.840 If we can pull back anywhere above here and turn around, we're in good health because we have a higher high, then a higher low. If we can then get a higher high again, we just keep on going up. Again, I'd consider a macro higher lows here, here, and here, right? There's some in here. I mean, that's fine, and that's fine too. But as long as we keep these higher lows coming, and again, I mean, there's like, oh, we broke down here. That's fine. If we can keep all these higher lows, we're good. Once we broke below 13,733, I'd become pretty worried. But I think we're going sideways anyways. I think this is going to be much more of a horizontal play as well. But again, NASDAQ looks just okay. I'm still fairly bullish on it. Let's see what the Russell looks like. The Russell, again, is coming down. Again, this is what I think most indexes are going to do, is go sideways. Again, orange lines are resistances, white lines are supports. Has this line acted as support before? Kind of. It bounced here, bounced there. It broke through here, bounced here a little bit. So I'm not overly convinced. You know, it came here and tested here and took off. I'm not overly convinced this 22 area is really that strong of a support. Maybe towards 22 itself will be stronger because it's a whole number, and also it has a lot more bounces here. But once we break down at 2200, break down here, then we're going to see some true value. 2164 is great. The 2145 and eventually 2110. So this again kind of reaffirms what we're talking about. If the S&P is coming down hard and the Russell's coming down, it's fairly hard. It's more volatile anyways. But the NASDAQ isn't terrible either. There's a good chance you're going to find some great growth stocks that are cheap and took a beating months ago. They may be coming back finally, and we're taking a nice rotation towards those. Let's check the Dow 30 and see what's up with that real quick. So we have -YM. Look at that. So we get down to perfect deals in this area. This is bad news for some people. I mean, the structure is kind of breaking, which again is not horrible. I mean, it's been leading for months now. So there's a high chance we're going to see some restructuring with the Dow 30. I mean, this is a super intense sell-off. This doesn't happen very often. You're going to try and go for a horizontal play now. We can delete all this. Honestly, we'll bring it back out. We'll put it back on later. But, like, where are your support levels going to be? There? Well, it broke that. But, I mean, you have one probably right about here, and one probably right about here, and here. I mean, maybe one way up there. So, and also I'm determining this by resistances, right? Old resistances become new supports, right? So I'm looking for maybe a bounce at 32,762, and then you have a freaking large gap down, like a few hundred points. It does consolidate here. Volume profile will also help you a lot too. So, I mean, we'll probably see a possible bounce here, and then maybe at 31.4. So, I mean, it's coming down hard. It's definitely showing where the volume's going. We have a lot of selling off going on. That's a little nerve-wracking because it's coming down super hard. But again, if everyone's getting scared of industrial stocks and basic materials and some of those kinds of things, it's probably the time to buy some if you're going to be a long-term hold. I don't know why you would look at Dow 30 stocks. Sorry, I hit the buttons. So I hit the Dow 30 stocks. I mean, if I'm going to be buying almost any of these here, it's going to be for a 5 to 10 year hold anyways, right? I mean, GS, Goldman Sachs, your Intel, your Coca-Cola, your Nike. I mean, a lot of these are coming into value. Nike's at a great value. I know that for a fact. I've been tracking that. Nike's exactly where you'd want to buy it. I mean, this is a great support area. You probably see a return of 5 to 10% within the year, easy on that. I mean, Verizon, Visa's coming down, Disney. I mean, there's a bunch of stocks on this that are just coming down nice and steady. There are going to be a lot of these that come right into value, right? Like Microsoft is definitely going to be towards value here, I believe. Yeah, see how tech's doing fine? It was just a value. So I would definitely put a consideration your timetable for these new ones. If you're going to really want to buy something for a long-term hold, check the Dow 30 stocks. If they're really getting to value, that's great. But once again, we could see a clear correlation that the NASDAQ and Russell are not as bad as the S&P and the Dow 30, which shows more folks have confidence or there's money or volume flowing into the smaller indexes with the smaller caps. Now, again, if everything's coming down, it's all coming down. It doesn't matter. It may come down less, but if you're not as confident in the short term, don't get too involved quite yet. Let's go ahead and check all the indexes together and see how they look structurally. First is XLB, real quick. White Claw. Claw's the law, baby. Materials, coming down. Broke hard, right? Big old sell-off. So again, it's probably tied to the supply chain issues we're seeing with wood and steel. My friend who works for Caterpillar Cat said that the company CAT has nuts and bolts that are the same as what Ford or F uses, and now they're fighting over them. Never has happened before. There's a huge supply chain management problem going on right now, and this is what materials and industrials is happening right now. So XLB is coming down hard. Again, try and find support. I drew this line a while ago, and we're coming right back down. Maybe around $78. You see some deals, but this trend line. I mean, you can take it and probably move it down and see we still have a chance. But I mean, it's not looking good for materials. Again, a great deal, find the support, but fundamentally doesn't make much sense. Comm services is surprisingly doing well. I've never been a big XLC guy, but it's holding. It's a good value. It's right here. We check the RRG graphs again. We can probably go back and check those real quick on the day. You know, no edits. I mean, you guys are here for the long term. You know, XLC. Okay, it's possibly leading. We'll see how it does. Not bad. I'll look into it. If there's any kind of good XLC stocks on value, I'd buy those. And again, I'll go to FinViz. Simply go like average volume over 200. I don't like anything less than that. And then comm services. And you can go ahead and try and find some good ones like this. Again, this might be like, oh, do you want to go through 200 stocks? Do you want money? I mean, what are we doing? Do you want to do this the right way or the wrong way? I mean, look at LU. Look at right there. Oh, look at that. Let's go to LUMN. Wow, look at that. I tracked it. Looks really good technically. Looks good. So, I mean, if that was lining up, like where this is coming in the bottom of this channel and LUMN is coming in the bottom of their channel, like you see a fat support right here. Like that's a feedy fat support. And again, you're like, how you know? Became resistance, support, support, became a resistance, became a resistance, became a resistance, support, support. This line at 1376. I bet the volume is crazy. Wow, who knew? This whole area is pretty crazy for volume, right? Right about 1416 here. Looks like it's high volume. And so we can assume a lot of bulls will probably come in towards this area. And you can probably get an easy 5-10% swing right there. So XLC, I like it. I not really loved it for the rotation reasons, but again, it looks pretty good this week. XLE is shit in the bed. Oh, bed shitter. Took a huge hit. Massive. The only good thing about XLE, if we were to redraw this line, let's not cheat, because I hate cheaters. And they eat pumpkin eaters. Get it? This is a fine trend line that's been holding just fine. The issue with XLE I've talked about, you zoom out, it's actually downtrending pretty hard. I mean, it's for months and actually years been on the downtrend. Now it has uptrending years. I mean, but there's some huge fat sell-offs in energy. Again, just because the energy sector itself is rotating into new things, right? They don't cost as much and have as much viability for some people. So it's coming to where you want to buy it. There's some good convergence here. So again, energy, fundamentally, this week got the dick kicked out of it, but it could be really good moving upwards because of the value alone. Again, XLE stocks are not going to be created equally. You have coal stocks, you have solar stocks, you have nuclear stocks, you have uranium. It could be a bunch of different things. Make sure you find the ones that are a good value, and XLE could be good for this week. Keyword could. If this continues, don't buy in. XLF, more like XL RIP. Sick joke. XLF, I ate so much food today. I'm making a food coma. I had ramen, and I made brunch. That's why I look kind of lethargic at the moment. I'm so full. XLF is dead. I mean, look at the volume profile. This is a fat volume node. All right. We should see some action here. All right, we have lines. You can say right here is a good node, right there is a good node, or right there is a fat node. And we can see plenty, get rid of that. We see this is acting as supports and resistances where the high volume nodes are. So we broke this one. All right, so we're probably looking at a support near 34.30. If we come down here and show some life, you could get some great deals. Once again, if you tie that, and you think, all right, XLF is on discount. What stocks are also on discount? Oh, Dow 30. Oh, S&P. That gets us to our JP Morgans, our PNCs, our Chase, our Visa. These kind of big financial institutions may be at a great discount. Now, again, that means jack shit if there's no money coming into it. If no one's buying, you're going to get burned. But again, contrarians make the most money in markets. So if everyone's selling, you should be buying. And I don't mean that as advice, but that's what everyone keeps saying, right? Peter Lynch and all these folks say buy when folks are selling. If everyone's selling, you're going to be getting the best deals. And a lot of these ones and these large caps and these blue chips are 2 to 10 to 20 year holds. you're getting a huge discount. I mean, you could have bought this stuff the last 2 months and you would have been paying more, but you could have bought some stuff here at 38.56 and you'd already be down almost 10% from where it is now, right? So I mean, if you really believe in the financial sector moving forward, it's a great deal. But again, if you're not buying long term, don't touch it until you see some life, right? Same with industrials, we're coming down. The only good news with industrials is it's not nearly as bad as the other sectors, but again, it's still like a freaking like a 10%. Oh geez, it's definitely like a 10% sell-off for sure. It's really coming off hard here. What's it down? Yeah, like 7%. It's coming down. Same story with financials. Long-term holds, you're getting great deals. If you really don't believe in it short-term, don't buy it. XLK is shockingly doing well. This is gone. Right here, that's gone. We have this now. And again, I always change these things. Looks really good. We are getting towards the top of the channel. All right, we're getting towards the top here. This is a hard resistance. If this was a random ticker and you're like, hey, you want to buy this up here? No, not really. But I don't think that's really how indexes should be seen or how macro level stuff works that often. Because you look at XLK on a large term chart, you'd be like, I don't want to buy it up here. This looks way too high. And then like a year later, you're over here and you're like, oh shit, what did I do? So I mean, damn. So we can see, yeah, it's probably high up here, but again, in 5 to 10 years, I'm assuming XLK is going to be 200, right? So always a fine purchase. Again, we have a nice support area right here developing itself right about there. And again, what's doing that? Oh, an old resistance became a new support. That's how this works. And so if you can buy in around 140 this week, probably be good for a day trade. I would like to buy it lower, but again, if only thing that's green is XLK, right? Might as well ride that wave, baby. Looks pretty good. Our consumer staples also shit in the bed, but again, it has a lot nicer lows. We have a good chance of probably seeing some form of support coming in soon. Keyword possibly. I don't know. But if staples does come down to $48 and some change in this area, I'd be willing to pick some of these up. Again, long-term hold-wise, it makes a lot of sense. But like XLF, XLI, XLB, until I see any kind of life, I'm not rushing into anything. Real estate, again, is popping off hard. When I was up here, I was like, it's getting up there. And then it's like, see you later, dork face. And I'm like, I was right. And then it's like, no, you weren't, moron. So XLRE, given the current fundamentals of the market, it makes some sense to buy in. Now, when this comes down, I think it's going to be hard. And I don't know how fast or long it's going to be up here. This is a big sell-off as well. You're going to have a fat gap right here, so it may just wick down and come back. But if this thing comes down and holds, sheesh, it's going to be a big old fatty. So I'd be cautious about that myself. But fundamentally speaking, real estate kind of makes some sense, doesn't it? Utilities is much the same. Huge sell-off, we're getting into value. XLV is holding up fine like real estate. It's healthcare. Folks need healthcare. The COVID thing did a number on folks. You have a nice trend line up here. Looks pretty good. It's kind of wedging though. So again, be cautious, but again, you're getting towards some value. And then discretionary, again, has been at value for a while. It also got hit pretty hard before, but now we're rotating. Moral of the story is this. You got to do this yourself, firstly, because I do this for myself mainly, and then you guys watch and you're like, wow, he's pretty smart. Not really. Well, but it's okay. What you guys really need to start focusing on, in my opinion, is doing this yourself and making a game plan. Again, it starts with risk management. Until you fully understand and you fully accept the risk you're taking when you put on a trade, you're never going to be successful. I mean that politely. If you're the kind of person who's newer to this and you're buying AMC, GME, CCIV, PLTR, that's all you buy because it's what you heard, you're probably okay. But again, until you fully understand the risk you're putting out there and what you're taking in, you're never going to be at your full potential. So again, those stocks are fine. I mean, I don't think they're horrible. I think actually those growth tech ones are perfect right now. But if you're going to be just focusing the same 5 or 6 tickers and not kind of expand your horizons and accept this risk of just trading the same 5 or 6, you're going to have a hard time. That leads to a good trading plan. You need to have a trading plan ready to go, written out, drawn on, whatever it may be. If you check my video from yesterday, you'll see a bunch of squares I draw on there, like I guess would be on this side of the screen. I draw them on there. That way I have a drawn on plan. I also have a written plan usually. But again, I have my risk determined, my reward determined, all the lines are ready to go, and that way I'm always ready to be, executing out of a trade, and I never have a losing percentage. I actually have a 100% win percentage. Why? Because a win to me is executing my plan to a T. If I hit a stop loss and I sell out, dub, I won. I lost money, but I won. It was my trading plan was successful, right? My plan was implemented and it was successful. I get up a price target and I have my validation strategy ready. I validate it out, boom, dub. I bought CLNE at like $4 and got out at 8, and now it's up to 40. Am I upset? No, because my plan was to get out at 8. Successful. I made a trading plan. I executed on it. That gets us then to our mental analysis, fundamental, and technical analysis. If you're not going to do all three of these things with the macro markets, you're never going to be successful, right? Know what they're looking at technically, know what their driving forces are, know what their whole entire mental capacities are, how does that work in your mind, what do you know, what are you confident in. If you're really good with healthcare stocks, really good with tech stocks, focus it, right? Like LeBron James, like Chris Paul, like Tom Brady, they focus one or two things and get really, really good at it. Focus, specialize your portfolio, diversify where you can, but again, focus what you're good at. Third to last is goal setting. If you're going to be buying a Dow 30 stock for a day trade, what are you doing? That's not how that works. If you're going to buy a Dow 30 stock like Disney or Coca-Cola for a 30-year hold for the growth, the eventual splits, and the dividends, yeah, you're a fucking genius. This is where you want to buy them at. This is great. But if you're going to be buying them for a day trade, it doesn't make any sense. It's not in the goal setting atmosphere what you're talking about. And same thing with like a PLTR. You can scalp that all day, big fella. I think those have huge potential long term as well. But to try and swing trade in this kind of market without any type of foresight on what sector to focus, it's going to be a bad time. So make sure your goal setting is particularly keen and accurate. And then second to last, again, is macro markets. Make sure you know all the sectors, XLB, CEF, IKP, REU, XVY, whatever it is. Check all those, know what they're talking about. You can go to, again, stockcharts.com. I think it's a paid service, again, for these, but you can actually go to this one. Oh, God. Go to this one. I can see if I can share it. This one does the same exact thing, just in bar graphs, which is fine. And again, you can see the last 2 days. I mean, it's all getting hit fairly hard here, right? So if you were to buy any of these besides real estate and technology, and I guess some energy and healthcare, you'd be getting massacred, right? And again, I think this is rotating. We gotta find this. I gotta find somewhere to find more updated information. So far, I think we're still somewhere in here, but again, we may be also over here. We're gonna see what's up, right? But you gotta know what you're talking about on the macro markets. If you have no idea the indexes, whatever the stocks you're buying, whatever they're in, you're gonna have a hard time. So again, that's the point of this show, is to focus on those kinds of things. And lastly, this all leads to subscribing. No, it gets down to consistency. You must be consistent. You must have a plan. You must have goals. You must have analysis, and then you must be consistent and act upon it. As simple as that. So, if that sounds good to you, if this is information you never heard before, like, subscribe, hit the bell notification. I'm sure if you sat around for a 33-minute video, which probably none of you did, that's okay though. If you did, you probably got some good stuff out of this. I appreciate you guys' time. We'll see how the week goes. It may be a bit more red, and then I think some green. We'll see. Have a good rest of your Saturday. We'll see you guys next time.